For more, let's get straight to our guest, and we're joined by Harsha Upadhyaya. He's a fund manager at UTI Asset Management, the asset management arm of UTI Mutual. He's joining us live now, and his fund is one of the top 10 biggest Indian mutual funds, managing $1.2 billion. Harsha, very good morning to you. Thanks for coming in early your time. Welcome to the program. First off, I want to get your views on that Goldman call that Indian stocks may react negatively to any policy tightening by the central bank. Do you see that happening?
Sorry, you are not very audible.
Just curious if you see Indian stocks, if they may react negatively if the central bank there decides to tighten monetary policy. How do you think stocks are going to react when the central bank takes its next move, which will be January 29th?
Yes, I think there is already a sense of a gradual tightening that's expected in the Indian markets. I think a bit of it is already priced in. If you see Indian stock price movements in the recent past, they have been more or less range bound, anticipating some kind of a tightening in terms of monetary policy from the central bank, which is likely to happen maybe during this meeting or in the early next meeting. Clearly, I think central bank is in a dilemma because we are looking at increasing credit growth in the banking industry. At the same time, inflation is moving up because of supply side issues. So at this point of time, whether it is right to increase interest rates and tighten monetary situation is quite a bit of a dilemma for central bank. But as and when it happens, I think stocks may not react too much to this news because it's already a kind of priced in the current prices. And if at all prices do react to this news, I think that will be an opportunity to buy for the longer term, because that clearly shows that the government is confident about sustainable growth going forward, and that's the reason why they're increasing interest rates.
Let's talk just a moment about the economic outlook. You mentioned inflation, the central bank being in somewhat of a challenging position. Do you see inflation getting out of hand there in India?
Well, the only silver lining is rupee has been appreciating against dollars. So to that extent, our crude imports are getting priced in at lower levels. So as long as rupee doesn't depreciate, I think we will be in a range-bound inflation area. But if food prices were to sharply go up from here on, or the crude prices were to go up from here on, I think it will be a challenge for Indian economy. But at the moment, I think we are close to 7.3%, and I think we should be in this range for a couple of more months before heading backwards.
Let's talk briefly about the consumption story, because consumption obviously a big deal when you have an economy as large as India and as many people as there are in India. But why hasn't India gone the way of China in a consumption boom?
I think it is about to take off. We have seen that happening in some of the sectors. For example, automobiles have shown very, very strong growth in the last 12 to 18 months. I think even the white goods sector, although there are no stock market place in that sense for that particular sector, that has shown good growth in the recent past. It's just a matter of time before you start seeing in consumption wave happening in other sectors such as retail, fast-moving consumer goods, and maybe even banking and financial services. As you would have seen, India has been growing at about 7 to 9% in terms of GDP for the last several years, and per capita income for working class has been going up and doubling every 5 to 6 years, and that's a huge amount of increase in disposable income that people will have. And also, if you look at the demography, nearly 50% of our population is below 25 years of age, which means that either now or going forward in a few years they will be start earning, which is a huge kicker for any economy like ours. Hopefully this all will turn into a big consumption play in the years to come.
And as we talk about this consumption play, which sectors do you think are going to take the biggest lift? As you look at your allocations and investments, where will you be adding positions this year?
I think automobiles will definitely be one of the strongest sectors, but in terms of valuations, we are a little bit cautious on the sector, as we have seen valuations going slightly ahead of fundamentals in some of the select stocks in the category. Retail and fast-moving consumer goods would be another area. Again, one has to be stock specific because of the valuation issues. Banking and financial services will be one more sector where one could look at adding position, because it's an underpenetrated sector in India. There is a large room for growth for banking and financial services in the country, and we are quite positive on banking and financial, even from the medium to longer term perspective.
Quick question on telecoms. It seems you're wary of the telecom industry there in India. Tell us why.
Yes, one is it's no longer a growth story in Indian scenario. Already we are seeing monthly subscriber additions plateauing. We have seen 4 or 5 new players getting into the market, and there has been a intense pricing pressure on the industry. We generally don't like any industry where there is no pricing power, and telecom is definitely one of that. And the stocks have reacted very sharply in the last quarter, but I think it's just the beginning. We have not seen the intense competition and the lower profitability hurting financials of any of the companies yet. I think this December quarter results will be the first set of numbers where you will see some kind of pressure on telecom companies, which will only increase going forward. I think at least for next 2 to 3 quarters, I think these companies will underperform the broader market. So we would be avoiding this sector at least in the immediate term.
Okay, Harsha, some tips for investors as we look through the year to India. We've got to leave our conversation there, but thanks for coming on the program, especially early in the morning there in India. That's Harsha Upadhyaya of UTI Asset Management. Good to see you. Well.